Okay, in this video, we're going to review the HL30s that we had right after the rollover. So as we were discussing when we actually saw these setups, and then again, as I mentioned, I'm going to be most likely sharing this video with new students and potential new students. People that might be interested in what it is that we do exactly when we're coaching one-on-one. So again, if I sort of go back and forth with explanations and you've already been told this material, please understand that I'm just sort of informing everybody as to what it is that we're doing if they're watching this afterwards. So these are the HL30s, and as we were talking about prior to the market opening on it really depends on where you live. This system, this method, and I get asked this question quite a bit, is will it work in Germany? Will it work in Europe? Will it work in the United States? It works everywhere. You just have to be ready when the market opens for trading. So for us, when you and I were trading it, it was Sunday, New York time, and it's 5 p.m. when the market opens in the United States, Sunday. So depending if you're in Australia, obviously it's going to be a totally different time. First of all, if you're watching this and you're new to this particular strategy, what you see isn't guaranteed to happen every single time. And what I mean by that is that the setup, when we get these initial setups, they're not always going to take place at the exact same time. Now, with the start of a new week, we already know what our highs and lows are for the previous trading day, which would be Friday. So our high here on the dollar yen was here with that high that which was just at almost at the close. That was at 121.47. Now, if we're going to trade the HL30, let me go ahead and get this one out of the way right now. If we're going to, we've already done this, so I'm just sort of reviewing so that way you have it in your mind, and this video is for you, so that way you can go back and watch how we trade and execute these HL30s so that you can duplicate this all of the time. But again, when we start trading for the new day, whether it's a Sunday or Monday, the first day of the week, or if it's Tuesday or Wednesday, right after that rollover period, it's the same thing. We still go back to the previous day's trading range and we identify the high and then the low. Now, the low really isn't having an impact here, so I'm not going to really draw a support level there. It could later on, but right now it's not. We're trading off of resistance. Now, another thing I want to mention is obviously you know by watching the close on Friday that it's not always guaranteed that price is going to close right at the highs or right at the lows. I mean, sometimes it'll happen right in the middle of this overall trading range. So again, please keep in mind that every time you see this or you trade this, it's not always going to produce these results, and not every Sunday do we get an HL30 right away within the first hour or two. It happens very often. I mean, it happens often enough for you to prepare for it and to watch it. So when I work with you one-on-one, whether you're a current coaching student or you're considering it, this is what we do. You've got to be ready, and they're actively trading with me when I trade, and you're well aware of exactly what it is we're going to trade. Now, again, with the previous day's high, we know what Friday's high was, so all through the weekend we've already got our chart set up. The high again here on the dollar yen 30-minute time frame was 121.48. So that high of that first candle, here's the first candle, and then it goes up as high as 121.49. So that's only 1 pip above Friday's high. And at that point, we have that 10 pip range. So keep in mind that price needs to go up to at least 10 pips below this resistance, but it cannot exceed 10 pips above resistance. So let me go ahead and draw that in and show you what that looks like for those of you who are not familiar with it. So if Friday's high was 48, that's resistance, then we need price to go up to at least 38. But it cannot exceed 58 on the top side. So what that means is that, let's just say, for example, this was the high, and then price just before it closed for the day dropped down here to, let's say, 13. Then price would need to come up to at least 38 to qualify for that 10 pip range, but it could not go through and above 58 to qualify for the 10 pip range. Overall, from the high to the low, where these extreme levels are, that is effectively 20 pips, but I call it the 10 pip range. It just needs to approach the previous day's high within 10 pips, not exceeding 10 pips, but at least 10 pips. And at that point, we wait for the reversal candle, and that was our signal right there. That was the reversal signal candle. It was an engulfing candle. So there are a couple of different candle patterns that we're looking for: bullish or bearish engulfing candle patterns, or evening stars or morning stars, depending on which direction you're trading it in. Now, of course, there are some advanced candle patterns where we're looking at 5, 6, maybe even 7 different candles, grouping them all into one, and then sometimes we're looking at the 1 hour time frame, but it really didn't happen here, so we're not really even going to talk about that. But I will explain that with you when we actually do see those events, because you're actually trading this with me, and you actually traded this with me. This is the same trades that we actually executed this morning. So all 4 of these we're going to review that we traded this morning. Now here, once we get the reversal candle, we know that it's already reached the 10 pip range. It's already done step 1. We have the reversal signal candle. That's step 2. We have to wait for the candle to close, and then we go down here to the CCI. So I'm going to use the crosshairs, and the high of Friday, the previous day's high, that high candle, the CCI reading on that high was positive 79.34. And then we wait for the reversal candle to close here, and that candle, when it closed, printed a CCI reading of positive 21.67. So that's what we need. That was our final step of confirmation. It needs to be printing a lower reading. The CCI needs to be printing a lower reading if we're going to sell it off of resistance than the previous day's spike high CCI reading. So that was all of our confirmation. All we need now is just to get in when the candle closes. And we already knew what it was because you and I were actually watching this one and we knew what it was as this candle was actually closing. So again, we don't always know that it's going to happen in the first hour. Sometimes it might take until the London session before we get an HL30. Other times it might even take until the New York trading session that we get an HL30. But in this instance, and it does happen very often for you to prepare for it, we got the HL30 within the first hour. Now, when that candle closed, that printed a close of 34. That was our entry, 121.34. There's our entry right there. Now we're using a 20 pip stop and a 20 pip target. So with a 20 pip target, 34, 24, 14, all the way down here at 14, that's 20 pips. And then a 20 pip stop, 34, 44, 54. Right up here is our stop. Now, you asked me as soon as we set this up, if the stop loss would have been lower than the Friday's high, would I have executed the trade? And yes, I would like to see the stop loss above the high, clearing everything just in case there is a retest. But the rules for the HL30, if everything else lines up, now remember, we do have a few other rules that we need to step back and look at, which are, was there a previous trend in place qualifying this as an HL30, which there was on Friday. So on the previous day when we got our HL30, there was a trend here in place. So if this would have been consolidation right here, that would have lasted for a few days, let's say going sideways the way my cursor is, and we would have already executed a few HL30s, then we would not have probably traded this one. This one would not have been as reliable. They do sometimes work, but they're not as reliable. There is the possibility that it could fail, and that's when we stay away from it. If there's any chance, any suspicion that any of these will fail, we don't take them. Because like any other trading system, I mean, we always could run into a problem where it could potentially fail. So in answer to your question, would I have executed the trade if the stop would have been below Friday's high? Yes, I still would have executed the trade as long as all of these conditions would have been met and they all would have been in place. So we had everything perfect, all the criteria for an HL30 here. Remember, that previous day, that rally, that's exactly what we want. Now, but in this case, the stop was above Friday's high, so that was good too. So the entry here at 34, so we're going to go ahead and take this out a few candles, and you can see that it really didn't take that long. It took 1, 2, 3, 4 candles, each one of these 30-minute candles. That's it. Now, again, you had asked if you wanted to go another 20. I do. I put 2 lots on every trade as soon as I open the trade. If the trade was to fail, and I had 2 open lots, if it was to fail with a 20-point stop, I would effectively lose 40 pips. Now, again, when price hits the first target, I close the first lot at that first target, earning effectively 20 pips. If price continues down, the next target would be 94 right here. That would be an additional 20 pips. So the second lot is still open at this point. And I then change the stop loss. I don't leave the stop loss here after it hit the first target. Once I lock in profits on the first lot at the first target, I then change the stop loss and set it to a break even. So my stop loss would have been moved from 54 to approximately 31. If my entry was at 34, with the spread, I'm going to go ahead and stick it over here, 31, 32 and a half, 33, right around there, whatever the spread is, so that if the second lot doesn't hit the second target and it pulls back up, it would stop me out at 0 on that second lot, but I would protect and keep the profits from the first lot, still earning my 20 pips. So we'll go ahead and take this out a few candles, and right down here it goes as low as 99, and right down here a few candles later it ends up hitting 94. So the high on the retracement after this one is high, this candle right here went as high as 18. Remember, price would have to go all the way back up to about 32 or 33 half, depending on the spread, and then it would stop me out on the second lot at 0. We wouldn't lose anything. It's just we wouldn't earn anything, but we would still earn the profits on the first. So this one earned us effectively 60 pips. If you were to trade it just like this, 2 lots. 2 lots, close the first lot for 20 pips, and then close the second lot for an additional 20 pips past the first target, but effectively from the entry at 34 to that final target there at 94, that's 40 pips. So 20 pips here, 40 pips here, a total of 60 pips on this trade. Now, if you were just executing one lot, because you did mention that you were, in the beginning, you started off trading off just one lot, which, again, I highly recommend everybody doing that. If you want to work with me and you want to consistently do exactly what I do, I'm trading with you side by side. When I execute this trade, you and I are talking on Skype, so you know exactly when to get in, when to get out. I'm not going to walk away from the computer when we've got trades open like this. We're always in constant contact. But if you want to just execute one lot to that first target, that's fine. You would have earned effectively 20 pips here. And that's it. Now, the other trade that we had was here just about at the same time, and this one was here on the euro dollar. So we had Friday's low here. Let me go ahead and move this back up. That's Friday's high. So remember, we're just trading short-term trades inside of what I consider, for the most part, consolidation, because we're just basically trading off of the previous day's high and low. That to me is a form of consolidation, really, until those two levels, one of those two levels is cleared. So we had the open here for the new week. We had the low, that actual low was there at 1.099, I'm sorry, 0996. 96. So that candle, that first candle right there, that was a low of 3. So it's already fulfilled the first step, which was to approach the previous day's low within the 10 pip range. And then at that point, we wait for the reversal candle. Now that white candle qualifies. It's engulfing the very first candle that we see there. It is engulfing. It does qualify. The only thing we need to do is verify with the CCI. So the previous day's low right there had a CCI reading of minus 63.40, and on that candle right there we had a reading of minus 49. So it was a higher reading than the previous day's low, and that was our entry. Now our entry here was on that close, which was 1.0006, and our first target is 26, and our stop was 86. So we get in at 6, the close of 1.1006. First target is 26, and the stop loss is down here at 86. Now again, please keep in mind, if you're watching this, you're not familiar with it, it's not every Sunday or every first day of the week trading that we get an HL30 this quick. But again, as I mentioned, it does happen often enough to be prepared for it and to be trading it with me when you go through the coaching. We're actively trading this. Now this goes as high as 22. We did wait a few candles later. That candle right there goes as high as 31. So this reached our first target. We earned approximately 20 pips here. If it goes further, so we'll go ahead and show you an example. 26, 36, 46. Remember, if it pulls back to the to a low of approximately 7.5 or 8, then we would close the second lot at 0 if you're using 2 lots. That one right there goes as high as 56. And that's when we earned another 20 pips. So again, 60 pips is what I earned, you did the same thing here. So for those of you that are watching, again, first of all, it's not every day when we get HL30s that we get 4 HL30s. Sometimes we only get 1 HL30 among all of the currency pairs that we trade. So I just want you to get, a really good understanding and expectations that every day is going to be a little bit different. But there are days like this that happen often enough that you can do this with me just exactly the way we do it. I've got lots of videos that go all the way back years, and even in some of the webinar presentations that I did with my coaching back a few months ago and during the summer, I showed examples just like this where at the beginning and the first hour, within the first hour or two of trading on Sunday or Monday, depending on where you live, we ended up with about 3, I believe, in one of the examples of the webinar, 3 HL30s. There was one on the dollar Swiss, one on the euro dollar and pound dollar. So it does happen. It happens quite a bit, but not. I can't guarantee that's always going to happen. There could be 3 weeks in a row where we won't see anything but maybe one HL30, or it might take until, like I said, the London or New York trading session or later in the Asian. So this one again earned a total of 60 pips, 20 to the first target, an additional 20 for a total of 40 on that second target, for a total of 60. So between this one and the previous trade that I just showed you, that was 120 pips. So our third trade, and these were all executed at about the same time, maybe within about a 30-minute or an hour after, depending on which currency it was. So again, start of the new week. Here's Friday's low. That low right there was at 53.05 or approximately 6, pretty close there. 53.05 or 53.06. The first candle actually jumps up and then pulls back. We need an engulfing candle, and we don't have that just yet. This one goes back down and tests. This is the pound dollar. This goes back down and tests support and goes as low as 7. We need an engulfing candle. This one is not an engulfing candle, but it does move up more than 50% of the length of that last bearish candle. And that's one of the other more advanced candle patterns that we trade. Again, all the conditions were right for this HL30. We had a previous downtrend, so we were trading the bounce off of that downtrend, off of the previous day's low. The only thing we need to do at this point is just confirm with the CCI. It's already reached or fulfilled step 1, which was to approach the support within the 10 pip range. The low from Friday's low, CCI, was minus 99.48. On the close of that white candle, we had minus 68. So that was our entry right here. And that close, let me get that for you, exactly or precisely was 15. So I'll go ahead and put that over here off to the side just so that we have a reference there. 15. Now, again, the first target is going to be 35 with an entry of 15. The stop is down here at 95. Again, would I have traded this if the stop would have been back up here? Most likely, as long as all the conditions were correct here for the HL30. But usually when you do trade it, especially like this, with this type of move before, the stop's going to be before, especially if price closes at the close or at that rollover period, whether it's Friday or whether it's any day during the week, at that rollover, if it closes at the highs or the lows, generally it will look something like this. So we'll go ahead and take it out a few candles. Here's where it hits the first target. If it hits the first target, obviously we're going to be looking for a second target. 35.55 was our final target here. And in this case, here was our entry at 15. This was the candle that stopped us out at break even. So we only earned 20 pips here. So we had 120 pips on the other one. We just added another 20 here to this one. Now, we were talking about this and you would ask, can you just go ahead and hold on to it? And I don't recommend doing that because then you end up giving back the profits from the first lot. I recommend locking in and holding on to the profits from the first lot. Not every currency pair is going to act the same way as all the others. This is the pound dollar, and it's going to act different than what could be reacting or how the euro dollar and the dollar yen are going to be reacting. And it could be maybe some there. Occasionally, there will be some kind of comments delivered later on during the London session, for example. Maybe a banking official might say something, or some kind of politician in the UK. Somebody might say something that will have an impact here on the pound dollar. So it's going to have a different reaction. So that's why I mentioned lock in those profits. Don't just let the second lot go indefinitely. You've got to honor and close that second lot at that break-even stop. And even if it bounces, it might come back down and test this support level and bounce and go right back up to it. But that's just the name of the game. That's the way we trade it. That's safety. It's going to lock in profits. It's going to produce consistency in our trading. And it's really the only way to make sure that we bank profits all the time. And that's exactly what ended up happening. We saw it bounce right back up and approach that resistance. So it happens every once in a while. It doesn't happen all the time, but it will happen every once in a while. And again, it could be just something that was an isolated incident here for the pound dollar. And that's why you make sure you follow the trade plan. You have to stick to the trade plan. So it was 20 pips here. So that's 140 pips so far. And then the last one was here on the dollar Swiss. So the dollar Swiss, again, Friday's high, that high right up there at 0.9800, major psychological resistance level. Price approached within the 10 pip range. That pullback here on the white one went, the white candle went as high as 90. So that qualified for the 10 pip range. We need to wait for the reversal candle. There's our reversal signal candle right there. That one closed at 86. The only thing we need to do now is just confirm with the CCI. The high here on Friday had a CCI reading of positive 69.31. And on the close of that signal candle, we had a CCI reading of positive 3. So that's a lower CCI reading than the previous day's high. It's exactly what we want. That's our final step of confirmation. So getting in at 86, 66, 46, in case you want to trade it for 2 lots, which we did. But for those who want to get an idea of how this actually works, 86, 96, 06, right up here. So again, it worked out that the stop loss was just above Friday's actual high. So let's go ahead and take this out. A few candles. 66 was our first target. That goes as low as 67. That white candle right there hit 66. The next candle hit 67. The following candle went down as low as 61. We close and lock in our first profits here at 66, earning approximately 20 pips. Then we change the stop loss. Remember that stop loss would come down from 6, and this one did not hit that second target and goes back up 86. I didn't mark that one in there. Let me go ahead and put that right over here. Where's a safe place to put it? Right up in here. So 86. Here's where it stopped us out at break even. And it didn't hit 46. So you can see the range. And again, you really have to honor the plan. If you're going to execute 2 lots, don't let the second lot run indefinitely and cut into the profits that you earn on the first lot. So we earned, I'm sorry, before I go any further, we earned 120 pips between the first two, euro dollar, dollar yen. We earned 20 pips on the pound dollar, and then we earned 20 pips here on the dollar Swiss. So effectively, we ended up earning 160 pips between just those 4 trades. The other trade that we had here, which was obviously later. So this is a good example for those of you who are watching this video and want to get an idea of when these actually set up. This was Friday's close. This was Sunday or Monday, depending on where you live. This was the first candle of the beginning of this week. And this one did not set up or close at resistance or support. It was more or less in the middle. I mean, towards the upper portion, but you can see that it wasn't approaching the 10 pip range here. It wasn't approaching the 10 pip range here. This is Friday's high. This is Friday's low. Now, when it approached and bounced off of that support level, it was really clear. It was really obvious. So all we had to do at this point was it fulfilled step 1, which was approach Friday's low here within the 10 pip range. We wait for the reversal signal candle. There's our reversal signal candle. Now, one of the things that you were a little bit concerned when we took this trade, obviously it was later in the day. I just kind of gave it away what happened there. But it was later in the day, yes, but that doesn't deter me. That doesn't change anything. It still is a bounce off of the previous day's high and low. And the market traders are going to, in many cases, react off of that level. You had asked if this engulfing candle was enough or if it should engulf the last strong candle. Well, what we had was another bearish candle. We need any engulfing candle or any reversal signal candle is what we were looking for. This white candle was the one that put us into the trade, and it engulfed the previous candle. If we never would have seen a candle like this, I would have wanted this candle to close more than 50% of the length of this strong bearish candle. But in fact, we ended up getting a candle right there in the middle, and then we got the engulfing candle here. So that was our signal. The signal was on the close. The entry was on the close of that candle at 46. I'll stick this out over here so we can set everything up here. And you'll notice just how different all of this is. Again, it doesn't occur right after the rollover period. It takes later on in the trading session. But still, be aware of the previous day's high and low. It does have an impact. It will eventually set up. Now, again, this one was different, and you only used one lot on this one. And I recommend only using one lot on this one. You certainly can use two. But we're looking at a trading range right up here with Friday's high. We can't expect a whole lot. Normally on the pound yen, we use a 40 pip first target and a 40 pip stop loss. So if we're using, I would put it down here initially here at 06 and 86 was our target. Something else I want to bring to your attention is that they don't usually work out this fast. Very often it's as a result of economic data. So it really didn't test the support level. And remember, if you lose on this trade, we only executed this one with one lot. This was another 40 pips in addition to all of the money that we had made so far in the morning. But again, if you put two lots on a trade like this and you get stopped out, you're effectively losing 80 pips. And that's one of the reasons why I recommend anybody that's going to be trading the HL30 on the pound yen or the euro yen, those yen crosses, because we're using a 40 pip target and a 40 pip stop. We don't trade these all that often, but if you're going to trade it, just use one lot. Do not use two lots. Two lots, we use two lots whenever we're trading the majors, which are the euro dollar, the pound dollar, the dollar Swiss, and the dollar yen. The yen crosses, the pound yen and the euro yen, they're different targets on the HL30. So we only earned approximately 40 pips on this trade. So net for the day, we ended up with just approximately 200 pips as a result of using two lots. Now, if you would have only used one lot on every trade, this one obviously earning 40 pips, and all of the other four trades, you would have earned 20 pips. So 20 on 4, that was 80, plus this one here would have resulted in 120 pips if you just used one lot, which is fine. Again, keep in mind that on some days, if you want to make as much as I'm making, you have to be ready and willing to execute up to 4 trades. It could be 2 trades at a time, 3 trades at a time. In this case, we had 4 trades open at one time, and then this one was actually executed later in the trading session. So 200 pips if you're using 2 lots, 120 pips if you're just using one lot, for those of you keeping score.